There is a 21-mile-wide stretch of water that quietly holds the power to disrupt your gas prices, your grocery bills, and your investment portfolio. And if instability erupts in Iran's leadership, even temporarily, that tiny corridor could become the epicenter of a global financial shock. If you want deep breakdowns of global economics and how world events hit your wallet directly, make sure you subscribe, because this isn't just geopolitics. This is personal finance on a global scale. The Strait of Hormuz connects the Persian Gulf to the Arabian Sea. It looks small on a map, almost insignificant, but roughly 20% of the world's oil supply flows through it every single day. Saudi Arabia, UAE, Kuwait, Iraq, Qatar all rely heavily on this route. China, India, Japan, South Korea, Europe, and the US all depend on oil that passes through this narrow channel. Now imagine this scenario. Sudden leadership instability in Iran, internal power struggles, military escalation, shipping insurance risk spikes. Even without a full closure, markets react instantly. Oil futures surge on uncertainty alone, because energy markets price in risk, not just actual supply loss. If traders believe disruption is possible, prices rise immediately. That's the fragility. The strait doesn't need to close to hurt the world, it just needs to feel unstable, and instability in Iran's political structure would dramatically raise that perception. This is where geopolitics turns into global finance, because oil is not regional, it's global. And when oil moves, everything moves. Now, let's bring this to your daily life. If markets fear disruption, oil could jump from $80 to $120 per barrel quickly, and that shock travels fast. Gas prices rise within days. Trucking becomes more expensive. Airline fuel costs increase. Shipping costs surge. And when shipping rises, retail prices follow. Food, electronics, clothing, construction materials. Oil is embedded in transportation, plastics, manufacturing, and agriculture. So even if you don't drive much, you still pay for oil. Now, add inflation psychology. When energy spikes, consumers expect higher prices. Businesses preemptively raise prices. Central banks face pressure. Interest rates may stay elevated longer. Mortgage rates remain high. Credit becomes expensive. Investment growth slows. Suddenly, a political shock, thousands of miles away, changes your financial reality. And if leadership instability creates prolonged uncertainty, insurance premiums for shipping tankers increase dramatically. Insurance alone can push oil higher even without supply loss. Markets hate unpredictability more than bad news. If investors cannot clearly assess the direction of Iranian leadership, they price in worst-case scenarios. This means volatility, and volatility means cost. Crises don't create equal outcomes. Energy companies may benefit. Oil exporting nations may gain leverage. Defense contractors may see increased government spending, but consumers lose oil importing. Countries suffer trade deficits. Emerging markets face currency pressure. Lower-income households feel the biggest squeeze because food and fuel are larger portions of their budget. Inflation becomes aggressive. Investors often move to safe havens. Gold, RIS, ESUS, Treasury bonds rally. The dollar strengthens. Risk assets fall. Volatility. Indexes spike. Short-term traders may profit. Long-term investors experience stress. And if oil remains elevated for months, global recession risk recess historically. Prolonged oil spikes have preceded economic slowdowns. High energy prices act like a tax on growth, and unlike taxes, they fluctuate unpredictably. The Strait of Hormuz is not just a shipping route, that is a financial pressure valve. And leadership instability in Iran increases pressure dramatically. A full closure would be economically catastrophic for multiple nations, including Iran itself. That's why most analysts believe a prolonged shutdown is unlikely. However, temporary disruptions are realistic. Harassment of tankers, naval incidents, sanctions, escalation. Cyber attacks on infrastructure. Even rumors of disruption. We can move markets violently. Modern financial markets react in milliseconds. Algorithms trade headlines instantly. Oil futures spike. Currencies shift. Equities reprice. The speed of reaction amplifies the economic shock. So, even if no closure occurs, instability alone is financially significant. The Strait of Hormuz represents something larger. The modern economy depends on fragile global choke points. A political shift in one region can raise inflation worldwide, increase mortgage rates. Slow stock growth. Affect millions who never think about maritime trade routes. The world economy runs on confidence. Confidence can disappear faster than supply. That is why the strait matters. and that is why leadership stability in Iran carries global financial weight.